Rick Santelli standing by at the CME in Chicago. He's got some breaking economic data. Rick, the numbers, please.
Yes, a litany of numbers. Let's start out with personal income for the month of April, shall we? We're expecting a big drop because it was so huge last month, but not the case. It's a big drop, minus 13.1. The whisper number was actually bigger, but the reason last month was revised from 21.1 to only up 20.9. So basically, you need to kind of average those two together. This was highly expected. And also remember when those income checks went out in many ways from the government on the spending side, expecting up 0.5% exactly as it arrived last month. Also a revision from 4.2 to 4.7. Now, let's go over some very important issues. The personal consumption expenditure deflator month over month, up 0.6 as expected, year over year, up 3.6. This is a little hotter than expected. And the interesting part about that is up 3.6 is the highest level since 2008. Since 2008. And if we go with the PCE core deflator month over month, up 0.7, a tenth hotter than expected, and 3.1 year over year. You're going back well before 2007 because that's the only data I have up to on this one, and it wasn't even up to 3% yet. So the year over year numbers we know are going to be hot because we're comparing year over year to very depressed levels last year on any pricing activity due to COVID. Inventories, on wholesale inventories, up 0.8 as expected. That's preliminary April. And on retail inventories, down 1.6%. This obviously is a problem. Think about all those widgets we need to replace and all the glitches arriving there. And finally, very quickly, advanced trade balance. We normally don't cover it. It changes a lot. But it was important because our last look at minus 90 was the biggest ever, the most negative ever. It's eased back. Minus 85.2, that's a deficit, and 84.3 is where it came in the year, so that's what we're comping to. After all of that, we're still hovering just below 161 on 10s. 183 billion as supply settles next week, of course, and we do have a 3-day weekend and some early closures today. Suffice it to say, no matter which direction you look, kicking the tires on the Fed as to how they're going to deal with some of these contentious potential pricing issues, whether they're transient or not. The market's going to continue to see hot numbers in the here and now, and that's what we need to pay closest attention to.
Shepard Smith here. Thanks for watching CNBC on YouTube.